Okay, let's unpack this. Imagine having an expert guide you through, a whole stack of complex reports, articles, data, distilling the absolute essence for you, not just the facts, but what they really mean. Well, that's exactly what we're about to do today. We're taking a deep dive into the recent Q1 FY26 financial results of Tanla Platforms Limited. They're a major player in the communications platform as a service industry, or CPA.
Right. And we've synthesized a pretty comprehensive picture for you. We looked at their official financial reports, recent press releases, detailed investor updates, and also the management's own commentary.
Yeah, so our mission here is to pull out the most important nuggets of knowledge, the key insights, helping you quickly, but also thoroughly understand Tanla's performance, where they're headed strategically, and, well, what it all truly means for their future. So jumping right in, what are the big headlines? What stood out from Tanla's first quarter of fiscal year 2026?
Well, okay, for the quarter, that's April to June 2025, Tanla's consolidated revenue came in around 10.4 billion. That's 141 crores. Now that's up about 3.8% year over year, so some growth. But here's where it gets interesting. While that top line grew, their profitability metrics, things like gross profit, EBITDA, and especially PAT, profit after tax, well, they all saw some pretty notable year-over-year declines.
Declined, okay.
Yeah, for example, Payt was down over 16% compared to the same quarter last year.
Right, so that's a fascinating story right there. Revenue up, maybe modestly, but profitability taking a hit. What should you be thinking about when you see a mixed performance like this? Because it's not just a simple mixed bag, is it? It kind of signals a strategic tightrope walk.
Precisely. Yeah, a tightrope walk is a good way to put it. For you, this means digging deeper is really crucial here. This kind of mixed performance suggests Canla is navigating a pretty dynamic market. So while they're still expanding that top line, there are clearly pressures on their margins. And that could come from pricing, maybe operational efficiency, or even, a shift in their business mix itself. It really sets the stage for a deeper look into where they're actually making their money and what their strategic priorities are to, well, address these profitability challenges.
Okay, so to do that, we need to get into their core businesses. Tanla focuses on two areas they call synergistic: digital platforms and enterprise communications. Let's break down how each segment performed. What drove their numbers this quarter?
Right. So the enterprise communication segment, that continues to be the main engine, really. It accounts for over 90% of their total revenue. It brought in about 9.49 billion this quarter, and it showed, healthy growth of 3.6% year over year. Now, this growth was largely propelled by what they call over-the-top or OTT channels.
Okay, so things like WhatsApp.
Exactly. Modern messaging apps, they offer much richer features than, traditional SMS. In fact, just looking at WhatsApp revenue alone, that grew by a huge 60.9% year over year. Significant.
Wow.
Yeah. And we also saw over 5 billion rich communication services RCS messages delivered in India. RCS is kind of like the next generation of SMS,
Right.
enabling things like high-res photos, group chats, read receipts. It makes texting feel more like using a chat app.
Okay, that sounds like a really clear growth driver then.
Yeah.
But if I'm understanding this correctly, the shift to these richer channels, while it's growing revenue, it also put pressure on their profitability within that same enterprise communication segment. That feels a bit counterintuitive.
It does, yeah, and it's a really key point to grasp. While the segment's gross profit did grow quarter over quarter, which is good, it actually declined 7.5% year over year.
Right.
And this decline, they attribute it to lower average price realization in SMS. So even as they're gaining volume and shifting to these richer, newer channels, traditional SMS, which is still a big chunk, is seeing pricing pressure. And that impacts the overall gross margins for the segment.
Got it. Okay, so it's a volume gain, but with eroding margins on the traditional side.
Yeah.
What about their other segment, digital platforms?
Right. Digital platforms. It contributed a smaller slice, about 8.8% of overall revenue, which was around 919 million. This segment saw decent growth too, 6.0% year over year. And that was primarily driven by newer offerings, things like Wisely ATP, that's their anti-smishing platform, and also MAP, messaging as a platform specifically for RCS. Its gross profit also saw pretty good year over year growth, up 5.8%.
So what's fascinating here, really, is how this whole ongoing shift towards rich media, like WhatsApp and RCS, isn't just about the revenue numbers. It's profoundly influencing Tanla's actual segment performance and their overall margins, you see. So for you, this means understanding where that true growth momentum is, but also recognizing the underlying challenges in, well, maintaining profitability in what's clearly a rapidly evolving market. Okay, let's shift gears a bit. Beyond the financials, Tanla has been making some big strategic moves, particularly on the innovation front. I've heard some buzz about an AI native platform. What's the latest there, and why is it so important for them?
Oh, absolutely. This is really a cornerstone of their future strategy, it seems. They've just completed the first deployment of this AI native platform. It's with a leading telco over in Southeast Asia, and the full commercial launch is expected quite soon, actually, in August 2025. So Q2. And look, this isn't just some small pilot project. They're talking about a multi-year contract built on a software as a service model, a SaaS model.
Ah, SaaS. So predictable revenue, recurring.
Exactly. Predictable, recurring, and typically high margin revenue. That's the goal. The platform itself, they say it's built on scalable AI infrastructure. It has something called an agentic layer, which basically means the AI system can act more autonomously, more intelligently within the telco's own environment. It's designed to integrate really seamlessly, with their network, their CRM applications,
Hmm.
over 20 integrations mentioned, and it's designed to reach 50 million mobile users right off the bat.
That's quite the scale.
It is. And their CEO, Uday Reddy, he specifically noted, and I'm quoting here, early feedback has been encouraging, and I'm confident this will unlock new opportunities for long-term shareholder value creation. So big hopes riding on this.
That sounds like a huge bet on AI then. And how does this connect to their sort of broader AI philosophy? Are they just building tech, or is there a bigger vision here?
Oh, it's definitely framed as a bigger vision. Sandeep Kapoor, who's their chief AI and data analytics officer, he really emphasized Tanla's commitment to building AI native platforms, so embedding generative AI right from the ground up. And crucially, he highlighted their focus on what they call responsible AI frameworks.
Responsible AI.
Yeah,
Okay.
ensuring things like fairness, transparency, compliance, all underpinned by a zero trust architecture for security. That's key. He actually views AI not as something that eliminates jobs, but more as a collaborator, a force multiplier for insight, creativity, and impact, fundamentally changing how work gets done.
Interesting perspective.
Yeah, it's all about building intelligence systems, self-learning, multimodal AI systems that can adapt contextually. It's quite forward-looking.
That's a really deep dive into their forward-looking thinking there. What else did they do this quarter, strategically speaking, to position themselves beyond just these big AI initiatives?
Well, they've been quite active on the corporate finance and governance side, too. The board announced a share buyback program. It's for 1.75 billion, or 175 crores, at 875 per share. That was approved by shareholders just recently in July, and it's expected to close by the end of August.
Right. Buybacks often signal confidence.
Usually, yes. They also made some key leadership appointments. Anupa Batra is coming in as the new chief financial officer, and Mr. Sunil Pumaralkar joins the board as an independent director. On the M&A front, the merger of Gamuga Softtech with Carix Mobile, that's progressing. It was submitted in May and likely to complete by the end of this fiscal year. Meanwhile, the acquisition of those Value First international entities, that's still waiting on regulatory approvals overseas.
Okay.
And one more thing, they continue to invest significantly in their own internally developed platforms. Their intangible assets under development, or IAU'd, that stood at nearly 1 billion. So lots of internal R&D happening.
So if we connect all this to the bigger picture, I mean, these look like pretty aggressive strategic moves, right? Especially the big investments in AI and that continued international expansion focus. It really highlights Tanla's commitment to long-term value creation. But like you said, it also requires a really steady hand on the wheel to navigate all these moving parts.
Okay, let's shift our focus now to their customer relationships. How strong are they really, and how does Tanla's market position reflect that? Because, ultimately, customers are the lifeblood of any business.
Absolutely. Couldn't agree more. Well, Tanla added 99 new logos, as they call them, just in Q1. And notably, almost 60%, 59% of these new additions were specifically for WhatsApp and RCS channels.
Reinforces that trend again. Exactly, shows you where the demand is. These new customers contributed about 77 million in revenue this quarter alone. But beyond just acquisition, their retention rates look pretty impressive. Customers they onboarded just in the last 12 months added nearly 400 million in revenue in Q1. And what's really striking, I think, is that over 50% of the revenue they get from their top 100 customers, that's been retained for more than 5 years.
5 years. That indicates some serious stickiness.
Very strong stickiness, yes.
Mm.
And the number of customers contributing over 500 million in annualized revenue, that also grew significantly, up 23% year over year. So it shows they're not just keeping customers, they're growing them, scaling up those relationships.
That's a really powerful statement about their customer loyalty and, I guess, their ability to grow from within their existing base. And where does all that place them in the broader market? How do they stack up?
Well, Tanla claims to be India's largest CPaaS provider.
Yeah.
They state they hold approximately 35% market share in India and about 30% overall CPaaS market share, globally speaking, I believe. They've also received some significant industry recognition. They were named a visionary in the 2024 Gartner Magic Quadrant for CPaaS.
That's a big one.
It is, yeah, a significant endorsement. And they were also listed among the 1,000 high-growth companies in Asia-Pacific by the Financial Times. Their blockchain-enabled platform, TrueBlock, which is focused on compliance, that's apparently reached over 1 billion users.
Mm.
And they report holding 100% market share in the UAE for compliance purposes, serving 3 out of the 4 major Indian telcos, too.
Wow.
Yeah, and they serve over 2,000 enterprises globally, including some huge names, Google, Meta, Truecaller, and they have a growing presence now across Southeast Asia, the Middle East, the USA, and Europe.
Okay, so what's really fascinating here is that consistent demonstration of acquiring new customers, but coupling that with these incredibly strong retention rates and, a clearly dominant market position, at least based on their claims and recognition. For you listening, this really translates into understanding the underlying strength and stability of their business. It goes beyond just those quarterly financial figures we talked about earlier. But I guess the question remains, how sustainable is this customer stickiness and market share in what seems like such a rapidly evolving and, frankly, competitive digital landscape? Right, so given these strategic shifts, that mixed financial performance, how is Tanla managing its overall financial health? Let's talk about the balance sheet, particularly cash flow. Because the company can have great ideas, great strategy, but without solid cash, it's, well, tough to execute, isn't it?
You're absolutely right. Cash is king, as they say. So Tanla ended Q1 with a pretty healthy cash balance. It was 9.1 billion, or 910 crores, and that's even after paying out an interim dividend.
Okay, that's a good cushion.
It is, yeah, a good sign of liquidity. However, the quarter actually saw a negative free cash flow. It was negative euro 309 million, and that's despite generating 64 million in operating cash flows.
Okay. Why the negative free cash flow then?
Well, it was largely impacted by softer cash collections compared to the previous quarter. This pushed up their days sales outstanding, or DSO. That's basically how long it takes them to collect money after making a sale. And their DSO stood at 91 days this quarter, which is, quite high.
91 days. Right.
Yeah. On the bright side, though, it's important to note Tanla Platforms Limited remains a completely debt-free company, so no leverage issues there.
Okay. So if we connect this back to the bigger picture, while that strong cash balance is definitely a positive, a safety net, that negative free cash flow and the higher DSO, they do indicate a short-term operational challenge, right?
Mm-hmm.
Related specifically to collections. So for you, the key question then becomes, how quickly can they normalize these collections? How quickly can they improve their operating and free cash flow generation, especially in the coming quarters while they're making these big strategic investments in AI and expansion?
Exactly. That's the operational balancing act right there. And, while Tanla doesn't give specific financial guidance, you look at management's commentary, and it consistently emphasizes their unwavering commitment to driving innovation and, crucially, profitable growth. There's that clear focus on the AI-led platforms and solutions we discussed, and they also continually stress their emphasis on maintaining high standards of governance, which kind of underscores a long-term, perhaps more sustainable institution-building approach.
Right. Okay, so we've just completed a really comprehensive deep dive into Tanla Platforms Limited Q1 FY26 results. We've explored everything from their headline financial performance, those strategic innovations in AI, through to their robust market position, customer stickiness, and their overall financial health, including those cash flow nuances.
Yeah, and this deep dive, it really shows us a company that's in active transformation, doesn't it? They're skillfully navigating both these really exciting growth opportunities, especially in cutting-edge AI platforms, but also dealing with the short-term, very real challenges inherent in scaling a business and managing cash flows effectively. So it raises, I think, a compelling question for you to consider going forward. How will Tanla's really aggressive pivot towards these AI native platforms and that deeper international expansion, how will that truly balance against the operational challenge of optimizing those short-term collection pressures, to sustain and ideally accelerate their long-term growth story. And maybe another layer to that, what does their strong emphasis on responsible AI truly mean for the future of trust in digital communications? Not just for Tanla, but maybe for the entire industry.
Plenty to mull over there. We certainly hope this deep dive has given you that valuable shortcut to being truly well-informed.